Hey, welcome back. Housing affordability has been improving due to a decrease in mortgage rates. So for example, average monthly housing payments of would-be homebuyers has now decreased to a 6-month low. That is good news, and also we're seeing more inventory levels, but that has not increased home sales on a national level. In today's video, I'm going to talk about Redfin's latest housing market update that was just posted today, which is on August 15th. Thank you everyone for joining me in today's video. I appreciate it so much. And also we're getting very close to 100,000 subscribers on this channel. I just can't believe it. I think when I'm filming this video, I think we're only about 40 away from reaching 100,000 subscribers. Absolutely blows my mind. And thank you all for your support. It comes from the bottom of my heart. I really appreciate your support. Anyways, let's talk about this housing report because there's some pretty big changes here. It says the typical U.S. housing payment has fallen to the lowest levels in about 6 months. So look at the median asking price, basically the asking price on a national level, compare that to the weekly average for mortgage rates has now decreased to the lowest levels since February. That has led to more buyer interest, but not more home sales. The median U.S. housing payment has dropped to nearly $250 below its springtime peak as rates have been decreasing. So your average monthly housing payment, if you're looking to buy an average price home today and you have an average mortgage rate, that is approximately $250 less per month right now compared to the springtime, which was the all-time record highs. Also, while Redfin agents are reporting a modest uptick in touring, in other words, people reaching out to Redfin to look at houses for sale, pending home sales are now down by 5% year over year. Something that they mention here later in this article here is that this is actually an improvement because last week it was down by about 6.2%. Now it's only down by 5%. So still down compared to last year, but not down as much compared to the report that was posted last week. Meanwhile, the median housing payment of U.S. homebuyers has dropped to its lowest level since February, as I mentioned, as weekly average mortgage rates fall or have fallen to their lowest level in over a year. Now, based on data we have today, that's not actually true. This is actually old news from about a week and a half ago, because a week and a half ago, here's what Freddie Mac posted. This was on August 8th. It says the 30-year fixed rate decreased to 6.47%, the lowest level in about 1 year. Now, a lot has changed since then, though, because look at today, which again is on August 15th. These are for people who have excellent credit looking to buy their first house, putting about 25% down, and they have a fantastic credit score. These are average rates on a national level, not my rates. As you guys know, I am a licensed loan officer. These are not my rates. These are just rates according to a survey from the Mortgage News Daily. So our average 30-year fixed rate increased to 6.58%, quite a bit higher compared to last week's average rate according to Freddie Mac. This is based on a survey that's conducted in the early parts of the week, and this was posted on August 8th. They typically post this each and every Thursday. So last week we saw a big decrease in rates, whereas today we actually saw a modest uptick up by about 9 basis points. Also for an FHA and a VA loan, you're looking around 6.12% to 6.14%. Now looking at the 30-year fixed rate at 6.58%, 1 year ago we were at 7.26%. So rates have decreased by about 68 basis points compared to 1 year ago. Even though they were down compared to a year ago by quite a bit, almost 75 basis points, we're still up compared to the lows. That was about a 1.5-year low that was set back in August 5th at 6.34%. But rates increased by 9 basis points today. And that was because of this right here, the 10-year Treasury note as of 12:43 Eastern Standard Time is up by about 11 basis points, approaching 4% right now. So looking at the economic calendar on Investopedia.com, here's what happened today, which is on Thursday again. Continuing jobless claims. These are people who are continuing to file for unemployment. That was at 1,864,000, lower than the forecast at 1.88 million, and also lower than the previous reading, which was last week at 1.871 million. So fewer people are continuing to file for unemployment, but also initial jobless claims This is a weekly survey from the government. Came in at 227,000, less than the forecast at 236,000. This is also lower than the previous reading at 234,000. So therefore, we're seeing less people who are filing for unemployment claims for the first time, which is initial jobless claims. And also we're seeing fewer people continuing to file for unemployment. That supported the growth of rates today. So big picture, this is exactly the opposite of what the Fed wants to see. They want to see fewer people earning a living, fewer people have jobs, because when you have a job, you're earning a living, and therefore you're earning a paycheck, and therefore you're spending more money, which all contributes to the increase of inflation, which is exactly what the Fed, of course, doesn't want. That's why rates increase, or mortgage rates increase today. On top of that, we saw retail sales came in at 2.66%, higher than the previous reading, which was in June. And also retail sales on a month-to-month basis all increased much more than the forecast as well. They're forecasting a gain of 0.4%. And we saw a gain of 1%. So big picture, what this means is that more people are spending their money, which is all contributing to the increase of inflation, which is exactly the opposite of what the bond market wants to see. And of course, exactly the opposite of what the Fed wants to see as well. Getting back to Redfin's report though, it says there are a few encouraging signs for home buyers. The total number of homes for sale, or housing inventory, is up by about 20% year over year. Additionally, less than 30% of houses are selling above the seller's list price. This means that approximately 70% are selling at or below the seller's list price. That's roughly on par with last week's levels as well, but is down from the 35% we saw 1 year ago. So 35% of houses were selling over asking 1 year ago. Now that share is only 30%. Also, despite declining costs and improving in housing affordability, pending home sales have yet to improve. Pending sales are down by 5.1% year over year, the biggest decrease since November, except for the previous week, and in which case we were down by 6.2%. So even though we're down compared to 1 year ago, the decline is actually a little bit better than last week's levels. 5.1% this week, 6.2% last week. There are also several reasons why home buyers are not jumping at the chance to take advantage of these lower rates. And that is namely due to high home prices. Basically, we're not too far off all-time record highs. So we're seeing a decrease in rates, which of course is increasing housing affordability, making it more affordable to buy houses. We're not seeing this big decrease in home prices. Additionally, according to Redfin, some prospective home buyers are sitting on the sidelines because of economic and political uncertainty around the presidential election. Also, some home buyers are waiting for rates to decrease more, and whether the US is going into a recession as well. So please leave me a comment below regarding this. If you guys are looking to buy a house, what are your reasons why you're waiting? Are you waiting for home prices to decrease, or are you waiting for home prices and rates to fall further? On top of that, are you guys concerned about the upcoming elections as well? Please leave me a comment below. Also, according to Redfin, there are a few signs that house hunters are starting the home buying process. So for example, on Wednesday, which was yesterday, mortgage purchase applications, according to the MBA, actually increased by 3% week over week, but we're still down compared to 1 year ago. Also, Redfin's Homebuyer Demand Index, which of course is a measure for requests for home tours and other home buying. Sorry, my dog is coughing here. So Redfin's demand index is down 10% year over year, but that's the smallest decrease since April. In regards to purchase applications, again, that increased by 3% from 1 week ago, but still down by 8% year over year. Let's actually look at their previous report from Redfin posted 1 week ago. And that is an improvement though, because right now, or last week, we were down 11%. Now it's only down by 8%. So it's decelerating. My least favorite word for housing market updates, but not down as much compared to last week. Also, Redfin's Homebuyer Demand Index is unchanged compared to 1 month ago, but still down by 10% year over year. Also, Google searches for homes for sale is up by 11% from 1 month ago, but still down by 3% year over year. Also, let's talk about home prices, house inventory, pending home sales, new listings, etc., and also the share of price drops as well. This covers the 4 weeks ended August 11th, looking at 400 US metros, and their weekly data goes back to 2015, and it is subject to revision. So the median sale price, just under $390,000. That's a gain of 3.4% from 12 months ago and up slightly from 1 week earlier. We're only about $6,750 below the all-time record highs that was set back in July. So looking at asking prices though, we're at just under $399,000. That's an increase of 5.9%. And this is kind of laughable here. The biggest increase on a year-over-year basis since October of 2022. I mean, go figure why we have a very close to all-time record highs of price reductions, because home sellers are asking too much for their houses, which is all contributing to houses taking longer to sell. And of course, we're seeing more price drops as well. Also looking at average monthly housing payments, that is at $2,588 at the rate of 6.47%. Again, that was the weekly rate about 1.5 weeks ago, according to Freddie Mac. Also though, at $2,588, that is a 6-month low, the lowest level since February this year. All right, let's talk about pending home sales, new listings, and active listings. Some people say that no one's buying houses. I mean, look at this. Over the past 4 weeks, the 4-week rolling average is 82,160 pending home sales. That's down by 5.1% year over year. The biggest decrease since November of last year, except for the previous week, which was down by 6.2%. So an improvement this week, only down by 5.1%. Despite this though, we're still seeing more new listings hitting the market. These are people listing their house for sale. That increased by 4.5%, and active listings is up by 18.9%. So even though we have approximately 19% more existing house for sale right now, pending home sales, a measure of people getting their offers accepted, writing offers, getting their offer accepted from the home buyer or home seller, decreased by 5.1%. So sales decreasing, yet supply increasing year over year. All right, let's have a look at Redfin's data center regarding home prices. And then we'll have a look at new listings, pending sales, and active listings. So the median sold price increased by 3% year over year, which is basically in line with long-term historical averages. We tend to see home prices increase in the range of 3 to 5%. So basically on the lower end of that spectrum right now, which coincidentally is right on par with this time last year. At this time last year, we also saw a gain of 3%. In contrast, look at 2022, we were up by 7%. In 2021, which is right about there, we saw a giant increase up by 16% year over year. In regards to new listings, it's still up compared to last year, up by 4.5%. There was approximately 92,000 new listings. Compare this to the same time frame in 21. There was 118,000. That's wild. Only 92,000, just over 92,000 right now. So new listings are down compared to 2022, 21, and also we're well below pre-COVID levels as well. In regards to pending home sales, that is at least a 3-year low right now, down by 5.1% year over year at 82,000. 21, we're at 121,000, approaching 121,000 back in 2021, and now we're less than 85,000 right now. In regards to active listings, which is the amount of houses for sale on a national level, that is up by 18.9%. That is actually less than, let me look at this, 18.9 is actually the smallest year-over-year increase since the 4 weeks ended April 21st, when at that time inventory levels increased by 17.79%. It's also worth noting here that inventory basically peaked much earlier than it should be, because inventory tends to peak in around August and September. And here we are in basically mid-August right now. And inventory is basically flat over the past several months now. All right, changing gears slightly here to talk about the 50 most populous metros and how they fare regarding home prices. And when I mean home prices, I'm talking about the median sale price. Half sold for below that number and half of the houses that sold above the number. So the biggest increases on a year-over-year basis is actually Philadelphia, up by 12.5%. Then we have Detroit, Anaheim, Newark, New Jersey, and also New Brunswick, New Jersey, up by 10.1%. So 1, 2, 3, 4, 5 of the 50 most populous metros are up by more than 10%. In contrast, there's only 3 metros that are down year over year. That's Austin, Texas, down by 3%. Then we have Tampa, Florida, down by 1.3%, and San Antonio, Texas, down by 1.3% as well. So it's 3 metros that decreased this week. Last week, though, there was actually 5 metros that were down. Those metros were, let me just look at this report, Austin, Texas, Dallas, Tampa, Nashville, and San Antonio, Texas. So Nashville, Tennessee is up year over year, as well as Dallas as well. And that, of course, because they're not listed in the metros that are down year over year. Let's also have a look at pending home sales, because there's 9 metros that increase compared to 12 months ago. Last week, that's actually an improvement, though, because there were 6 metros last week that reported gains in pending sales. Now we have 9 metros. On top of that, San Francisco, Cincinnati, and Sacramento all reported big increases. So San Francisco is up by 20.4% in the amount of people who are getting their offers accepted. And Cincinnati saw a gain of 10.4%. Sacramento is up by 10.2%. Looking at the report one week ago, San Francisco was only up by 9.1%. Sacramento, where I live and work as a real estate agent with my team here, reported gain up by 0.4%. Now it's up by a whopping 10.2%. Every housing market's different, right? After that, we have Los Angeles and San Jose, California. So interesting here that 4 of the top 5 metros are located in California. In contrast, the biggest decreases of pending sales are Houston, down by nearly 21%. Then we have Atlanta, 17.1%. Tampa, down by nearly 16%. Minneapolis, down by nearly 13%. And West Palm Beach, Florida, down by 12.5%. Also looking at new listings, that decrease in 11 metros of the 50 biggest ones nationwide. That's actually more compared to last week, because last week there was 8 metros that decreased. Now there's 11 that are down. So for example, the biggest decrease is actually in Atlanta, Georgia, down by 16%. Then we have Austin, Texas, Chicago, Portland, Oregon, Nassau County, New York, down by 3.1%. I'm sure I'm mispronouncing that city, so my apologies. In contrast, the biggest increases, Cincinnati, Ohio, a giant increase of 21% in regards to new supply hitting the market. Then we have San Jose, Sacramento, Baltimore, Maryland, up by 17.2%, and also San Diego, also up by 17%. All right, let's also discuss the month supply right now, because that's at 3.6 months, an increase compared to last week, but not as high compared to about 1 month ago, when the month supply was around 3.8 months. Having said that, though, at 3.6 months, though, this is at least a 3-year high as well. In fact, we've been at least a 3-year high ever since really March or February this year. In regards to how fast or how slow houses are selling, it, on average, it's taking about 35 days to sell a house. That's the median days in the market. You list your home for sale, and then you accept an offer from Homebuyer. On average, is at 35 days right now. This is at least a 3-year high as well. So for example, houses have been taking longer to sell ever since basically mid-April this year. Quite a bit different compared to the beginning of this year, when in January through early April, houses were selling faster compared to 2023, which is the orange line above there. This, of course, is all contributing to the rise of inventory levels as more new listings are hitting the market and houses are taking longer to sell on average. Speaking of that, let's look at the number of houses that sold above the seller's final list price. that was at nearly 30% right now, which means, of course, that 70% sold at or below the seller's asking price. So more often than not, houses are selling below the seller's list price. Also, let's have a look at the share of price drops. That's very close to an all-time record high that for data that goes back to 2015, excluding prior to that, of course. So the share of price drops is at 7%, which is actually an improvement compared to the previous week. And I believe it was at around 7.2%. So we're very close to all-time record highs regarding the share of price drops. Also, let's have a look at the average sale price to final list price ratio. That's at 99.3%, which means out of all the houses that sold over the previous 4 weeks, they sold for 0.7 percentage points less than the seller's final list price. Got that right the first time. Anyways, on average, houses selling below the seller's asking price. And that has been the case all year, in fact, because if at a 100% ratio, that means houses on average, which is this line right here, which means on average, houses selling for the seller's list price. But all year, houses have been selling less than the seller's list price. And lastly, let's look at Redfin's Homebuyer Demand Index, which of course is a measure of home tours and other home buying services. That is at least a 3-year low as well. It has been increasing ever since really mid-July, but we're still, or not we, Redfin is still at a 3-year low, at least right now. All right, to summarize today's video, because of course that was a lot of information to cover, here's my takeaway regarding this. We're not seeing a sharp pullback in home prices because we're still very close to all-time record highs, down by about $7,000 from the previous record high that was set back in July. We're seeing home sellers asking too much for their houses because that's the biggest increase, that 5.9%, the biggest increase since October of 2022. Because if home sellers are asking far more than their house is worth or what a buyer is willing to pay for it, then that all increases days on the market, and also it also causes more people or home sellers to reduce their asking price. So the share price drops also increases as well. So we're not seeing improvement regarding that, regarding home prices, but we are seeing improvement regarding average monthly housing payments, the lowest level since February, but that has not caused home sales to surge because we're still down by 5.1% year over year, but that is an improvement compared to last week. We'll have to see if these figures change due to the decrease in rates though. Also, we're seeing new listings increasing, but not increasing at a sharp clip, less than a 5% gain. And active listings has basically been stagnant for about 1 month ago. So this is all implying to me that we're seeing a kind of softening housing market, but no data supporting we're seeing a housing market crash because new supply hitting the market is not skyrocketing. Active listings is basically flat for about 2 months now. And on top of that, we're not seeing a sharp pullback in home sales because we're only down by 5.1%. But that's my biggest takeaway. What's your biggest takeaway? I would love to hear from you guys. Please comment below. Also, if you guys want a real estate agent referral, whether you're looking to buy or sell real estate anywhere nationwide, I can connect you with a great real estate agent in your neck of the woods. So please visit me at realestateteamfinder.com. Have an awesome day. Thank you so much for watching today's video. Like and subscribe, and we'll see you next video.